Prasenjit Basu is an economist and historian. His book, Asia Reborn, won the Best First Book Award at the 2018 Tata Literature Live Mumbai Lit Fest. His career began at Wharton Econometrics in 1990 and has over the years seen him as chief economist, India and Southeast Asia, at Credit Suisse First Boston, chief economist at Malaysia's Khazanah Nasional, chief Asia economist at Daiwa Securities, CEO of Maybank Kim Eng Research, board member at Tata Capital PVT Limited, chief Asian and Indian economist and chief Malaysia executive at Macquarie, and director of Asia Macroeconomics at UBS. He has taught at various international institutions, including University of Pennsylvania, S.P. Jain School of Global Management, and ESSEC Asia Pacific Business School. He has also served as president of Singapore's India Club and Tagore Society, and has recently been a consultant to the Asian Development Bank. He is currently chief economist at ICICI Securities. Prasenjit Basu will now speak on the Indian economy at 75.
Inspired by the previous session, I'll start with something dharmic. My previous book, Asia Reborn, explores why it is that the parts of Asia that were ruled by Japan are the most prosperous today and have been for the last 60 years. And the parts of Asia that were ruled by Britain the longest are the poorest. But really, if you think about Japan, it is a dharmic state. Japan is the one place in Asia that has retained its culture and traditions, and it is a genuinely dharmic state. It has an education system that is dharmic, that hasn't changed, has not been influenced by the West. So if we are looking for a model, the model is there. Please analyze the model of what Japan has done and why Korea and Taiwan, emulating the Japanese model, are equally prosperous. And prosperity diminishes as you move west away from Japan, partly because the rest of Asia is much more influenced by the West. So if we want, and now, just a simple point about this, not only is the education system dharmic, but the economic arrangements that they had began with providing employment for the mass, providing employment for everybody as quickly as possible through a labor-intensive export model. It's a very simple approach. India has not done it. Bharat has not done it, which is why we have this problem of high unemployment, of a very low labor force participation rate, all of which Shamika Ravi talked about yesterday. So the fundamental thing we need to address, apart from returning to our dharmic roots, is to have a labor market that operates in a free market manner and is not constrained by West European legal systems. So unfortunately, we are currently there with West European legal systems for labor legislation, partly from the 1890s and partly from the 1940s. That is being reformed. One of the reasons I am much more hopeful about the future of Bharat, and I'll tell you why, is that labor reform is central to what this current government, Modi 2.0, is doing. It has already done in the form of legislation. It has been passed by Parliament, it has been signed by the previous president, but interestingly, it has not yet been notified. You know, in India, some things are passed and they aren't notified. There was something called the Benami Transactions Illegalization Act or something around those lines, passed in 1988. It was not notified until 2014. September 2016. September 2016. It took that long for the law to actually become law. It was passed, but it was quietly shelved because it was not something that wasn't wanted by too many people. Now the labor reforms have been passed, they haven't been notified, but in some states they are being implemented. So we are progressing. So let me just start with the inheritance. I'll start with the inheritance that we had in 1947. Now, I don't consider that this 75th milestone is such an important one. India did not begin, or Bharat certainly did not begin in 1947. But at any rate, our constitution says we started in 1947, and so we are 75 in a week's time. Now, but the inheritance in 1947, from all records that exist, from the time, at least of Christ's birth, for want of a better term, from 0 AD until 1700, India was the world's largest economy. There was a brief 200-year period when perhaps China was slightly ahead, but for that 1700-year period, for almost all of it, except very brief periods, India was the world's largest economy. And if you're the world's largest economy, though, you're generally likely to be the world's largest trader, and your culture and influence spreads all across the world. Now, we can't say for sure that the whole world was Dharmic prior to the Ice Age, but it's possible. But anyway, what I can tell you is that if you travel across Asia, Bharatiya influence, Dharmic influence is everywhere, all the way to the Philippines. When Magellan was killed 501 years ago, he was killed by a Hindu ruler of a little island called Mactan in the Philippines. He is celebrated in the Philippines. The only thing the Philippines don't know, he was Hindu. He is wearing a dhoti. In all the statues that you see in the Philippines, he's wearing a dhoti. And he's a Hindu. His name is Lapu-Lapu, Sri Lapu-Lapu. Now, anyway, so he was the ruler, and he killed Magellan. So this was around the same time that other Portuguese, Magellan was Portuguese, although he was flying under the Spanish flag. Other Portuguese, of course, were hanging around the west coast of India, in Malacca, in what is now Malaysia, etc. But let me just quickly run you through this. In 0 AD, India's share of world GDP was 32%. About a third of all the income in the world was generated by India. The next largest was China with about 25%. The great Roman Empire that we study so much about and see so many movies was 14% of world GDP. And Italy, Rome itself, was 6.1%. So that was in 0 AD. By 1000 CE, India was still 28% of world GDP. China was 24%. And this, after all, was the golden age of India. This is the golden age of Bharat. You had the Guptas. The Guptas knew gravity. Aryabhatta described gravity. He had measured the circumference of the earth 1,000 years before Newton's famous apple moment. Brahmagupta had created the decimal system, elaborated on much of basic mathematics. Not only that, we had steel. There was wood steel that was essentially actually originated in Tamil country, but was available across the country, across the Bharatiya civilization. And you had Kalidas writing his poetry and his plays. You had Panini writing his grammars. But not only that, as Gurucharan Das points out, he was writing some beautiful love poetry as well. And Varaha Mihira was writing the first great encyclopedias that the world knew. And, of course, you had Vatsayanas, Kama Sutra, and sometime before that, you had the Pallavas and their Cambodian cousins. All across Cambodia, you still see the remnants of Pallava influence. There were the 5 Pala universities. Pala universities Nalanda, Vikramshila, Odantapuri, Jagodal, and Somapura. You had 5 of them with at least 10,000 students each from all over the world. There were at least 200 to 300 Koreans, 200 to 300 Chinese, all the time in Nalanda. And Nalanda is the only one we know a little bit more about, but there were 5 of them. That was the Ivy League of that time. The World Ivy League was in Eastern India. And that Eastern India was then conquered by Rajendra Chola, who became Gangaikonda Chola and established his capital in Gangaikonda Cholapuram. And then in 1025, he went and conquered the great Srivijaya Empire across the Malay Peninsula and what is now Indonesia. So all that was 1000 CE around that time. Now in 1700, India still accounted for 24.5% of world GDP. China was still second at 22.3%. And India was still the world's clothier. You know, when you think about clothes throughout human history until the Nehruvian period, India was the clothier to the world. And suddenly, we have stopped being the clothier to the world, and now China has become the clothier to the world, and now to some degree it's Bangladesh. Now, the interesting thing is we were still, 1700, we were the clothier to the world to such an extent that actually Indian cloth improved European lives hugely. Europeans used to wear wool on their bare bodies. So it was very scratchy. There was no vests and underwear. It's just wool, straight. It's a horrible, horrible existence, especially in the hotter periods of the year. And so when they discovered that they could trade more freely with India through the sea routes, they began to have much better lives. Their clothes improved. And Daniel Defoe in 1708 wrote that everything we have, our curtains, our bed linen, our vests and underwear, they're all Indian stuffs. 1708, okay? Now, before that, 1708, the British hadn't even really conquered anything. What were they doing? They were in Madras. They were in Madras and they were trading. And they were beginning to dominate the trade in peninsular India from their base in Madras. There was a man called Elihu Yale who became president of Madras. Some call it governor, some are president. He was president of Madras for 5 years. He made so much money in 5 years that he established one of the great universities of the world. My daughter is going there next week, so I'm quite happy. Thank goodness, great university. But where did he make his money? Looting India. Now, what is interesting about Yale, Elihu, is that he made most of his money. He was governor, but he had a lot of illegal trade going on outside the East India Company. East India Company was making money, but Elihu Yale was making even more. The next governor of Madras was a fellow called Thomas Pitt. Thomas Pitt made so much money. I mean, his wealth is today worth probably about $500 or $600 million from what he made in his 10 years in Madras. He established a dynasty that dominated British politics in the next century. There were 2 prime ministers called Pitt, his grandson, great-grandson. So, all just from trading in Madras. Now, meanwhile, Britain banned the import of Indian textiles in 1705. 1705. When did the Industrial Revolution begin? 1760. 55 years later, they kept Indian textiles out in order to protect and build up the so-called infant industry in Lancashire of textiles. So by 1900, India's share of world GDP was 8.6%. China's was 11.1%. Actually, I should also just mention, 1820, India's share was still 16%, much lower. It had come down to 16%. China's was double that, 33%. So China had not yet been subject to colonial depredations. Its share was now 1/3 of world GDP, where India was 1,820 years earlier. So India had been halved to 16%. Now, in 1820, Britain still had a tariff of 80% on Indian textiles. They had removed the ban, replaced with a tariff. But they were charging, so Indian textiles, even in 1820, were far more efficient and cost-effective than British textiles. So they had to charge an 80% tariff to keep Lancashire competitive, right? Now, so by 1900, India's share of world GDP had come to 8.6%. The real tragedy, though, and a real disgrace, is that it fell then to 4.2% in 1950, but it fell further to 3.2% in 1980. You know, my infamous question to Rahul Gandhi was about this. You went from 4.2% in 1950 to 3.2% of world GDP in 1980. You did a little bit better the next decade, but you were still at 4% of world GDP in 1990. So the entire Nehruvian period was a wash. We had a smaller share of world GDP in 1990 than we had in 1950. Absolute disaster that the Nehruvians brought about. And I could go on and on about them, but I don't want to. I want to move on to the future. So, what is our share today? This year, India's share of world GDP will be 7.5% at PPP. The whole thing is PPP exchange rate. So, our share of world GDP will be 7.5%. Note that that is still lower than in 1900. We haven't yet overcome the impact of colonialism and pseudo-colonialism under the Nehrus. Okay, now let's look at what has happened. This is the chart on the left. Unfortunately, you can't see, even I can't see it from here. Okay, what's written down there? Now, the main line there on the left shows you India's GDP growth each year, real GDP growth each year from 1952 until today. Notice that there are sorry, as a pointer. Yeah. Okay, so this is 1957. The first recession India faced was in 1957. What happened in 1957? Very interesting. You know, I mean, you hardly hear about this, but in 1956 was the famous industrial policy resolution, which said that almost all of the economy will be controlled and run by the state. 1956. 1 year later, India had a balance of payments crisis, and India had to turn to the IMF. Now, these, on the second chart here, on the right, I have shaded the periods during which India was under IMF auspices. India had IMF programs. There were 1, 2, 3, 4, 5, 6 of them. The last of them was fiscal year 92. That is the year of the big economic reforms. But the first one was in 1957-58. Then you had one in 62. You had one in 66. And then, of course, in 1980, the acceleration in growth that started was after a $5 billion IMF program. That was the biggest IMF loan to any country until that time. It didn't make too many headlines, but that was a huge one, and it definitely helped to reduce some of the Nehruvian controls and get the economy moving a little bit faster. Note that since that 92 one, there has been no other need for economic reform. Why is that? The chart on the right shows you the balance of payments current account deficit. The current account deficit is the total amount of imports of goods and services that exceed the total amount of exports of goods and services. Another way of thinking about that is that the current account is the difference between national savings and national investment. If you are investing more than you are saving, you're going to have a current account deficit. So when you had big current account, you see that if you look at this, when you had that big deficit, I shouldn't look there. Okay, when you had the big deficit in 1957, that 1957 deficit was about the current account. Now, so you had a current account deficit of just 3% of GDP in 57, 58, and that caused a big problem. Why? Because in those days, whatever deficit you had was funded through foreign aid. And if you need foreign aid to fund your deficit, then you better go to the IMF and fix it. IMF has to fix it for you. And that's essentially what used to happen. The IMF used to fix it and force some change. Now, the other interesting point is that, Morarji Desai is known for only one thing nowadays. But the reality is that when Morarji Desai, in the periods from 1950 to 1990, there were 1950 to 1977, there were 9 years in which Morarji Desai presented the budget. In those years, India's real GDP grew 5% on average. The average growth during that entire period was 3.5%. That is real GDP growth. Real GDP growth per capita was growing about 2% less than that because the population was growing about 2%. But Morarji actually deserves a lot of credit. If it hadn't been for Morarji, he became finance minister soon after the IMF crisis happened, the first one, and he improved the economy. He liberalized a little bit. During the 2 years that Morarji was prime minister, India had its fastest economic growth between 1947 and 1979. India's GDP growth was 6.5% in those 2 years. So that fellow, he should not be known just for one thing. He should be known for at least another, which is the best manager of the economy. He was a proper administrator with a slightly right-wing approach, as in fact, if you look at the Congress in 1950, Nehru's candidate for Congress president was defeated by a little-known right-wing person, so-called right-winger, and a Hindutva-type person called Purushottam Das Tandon. He defeated Nehru's candidate. So the left, this leftist approach that was enshrined in the 1956 Industrial Policy Resolution was, in fact, a minority view. But unfortunately, it came to be taken as gospel. Now, last year, of course, 2020, the fiscal year 2020-21, was the single worst year in terms of economic growth for India. It was a terrible year, but we had a global pandemic. India chose to take slightly extreme measures to deal with it, a lockdown for almost an entire quarter. So that was the worst year. But, so if you look at this, the chart on the left shows per capita GDP growth. And per capita GDP growth has actually in the fastest 5 years of per capita GDP growth in modern Indian history is Modi 1. The Modi 1.0 government, 2014 to 2019, per capita GDP grew 6.21%. That was the fastest growth that India has ever achieved in terms of per capita income. But of course, the last 2 years have been a much more difficult period. And now the recovery is beginning. Last year was a very good year. This year is going to be another very good year of economic growth, close to 8.5%. Last year was 8.7. This will be about 8.5. Next year, likely 9%. So you have a very strong recovery happening because, if you look at this chart on the right, the chart on the right shows gross domestic investment. The yellow line is gross domestic investment. Note that in 2002, this big surge in gross domestic investment began, which is the investment to GDP ratio rose sharply, and when that happens, you can generate faster economic growth. And note that even during the pandemic year, there was a downward spike in GDP growth, but investment spending remains strong, and that should ensure that you'll get a quick recovery, and that's what's happened last year in this. The way to think about economies really is that when all emerging economies emerge, they begin by exporting to the world. It started with the British Industrial Revolution. That was the first emerging economy. They were exporting, and they had a captive export market in India, right? So they had a captive export market in the empire, and they were exporting to the world. Now, why does every emerging market, every emerging economy begin with exports? For the simple reason that the world market, by definition, is always much larger than your own domestic market. And so it made a lot of sense for India in 1947 to be export-oriented rather than closed. For whatever reason, that didn't happen until 1991. Now, since 1991, there's really been a spectacular performance in exports relative to the past. So in the year 1991-92, the year of the economic reforms, India's total exports of goods were $18.5 billion. Last year, India exported $429 billion. So that's a 23-fold increase. And in terms of services, goods, in terms of invisibles, I call them here, can't see it unfortunately, invisibles, in the year 1991, it's invisible, yeah, unfortunately. So 8.9, it was 8.9 billion. In 1991, total invisible exports were 8.9 billion, that is all services, including remittances, 8.9 billion. Last year, last fiscal year until March 2022, that 1 year, it was 369 billion. Went from actually about 9 billion, 8.99 actually, 9 billion to 36.9, 41-fold increase over a 30-year period. So there we are beginning to see the benefits of participating in the global economy, exporting to the world, and the more competitive we can make our exports, the better our prospects for catching up and closing the gap with the colonizer economies of the past. But the last 10 years have been a really difficult period for the world economy. This is not something that is easily understood. And the reason for it is completely misunderstood around the world. So I'll try and explain why this misunderstanding is occurring. And mainly it's occurring because China is very good at bribing economists, journalists, politicians, etc. So let me tell you, China is responsible for what's happened here. Now, if you look at this chart, the chart on the left shows you the red line is global GDP growth. The number is generally averaging around 3% over that time. You'll notice. It's about 3%. Just take it from me. But the interesting thing is that the blue line, every year you find the blue line is much above the red line until the year 2010. After 2010, the two lines are together. Notice? Two lines are together after 2010. Before that, every year, global trade volume grew 1.5 to 3.5 times as fast as global GDP. Since then, what has happened? What has happened is, I'll tell you in a minute, it's all China, but I'll come back to this. Okay. So if you look at this chart, China has a completely dysfunctional, non-market financial system. It does not operate on market principles. And so, if you look at this chart on the right here, that shows fixed investment spending in China, India, and about 10 other economies around the world, including the United States, Europe, etc. For US, Indonesia, US is a developed economy, Indonesia is an emerging economy. Over the last 25 years, the compound annual growth rate of fixed investment in Indonesia and the US is just 3% a year. So 3% a year compound annual average growth over a 25-year period. Now, in China, the increase over 25 years, so this chart shows you last year's investment spending, fixed investment spending, various countries around the world, compared to 1996, 25 years earlier. So China's level is 1,717% higher than 25 years ago. Singapore, Indonesia, US are just about 120% higher. So 1/10 the increase that China has had over that 25-year period has occurred in those places. Now, India is slightly better off. India's is about 600% higher than 25 years ago. So, not a complete disaster, but what I'm arguing is that China has been over-investing, and the rest of the world has suffered an investment drought. India is part of that investment drought, but slightly less adversely affected than the rest of the world. Okay? Now, how has this been made possible? Chart on the left shows you money supply in China, US, Europe, and Japan. The red line, guess is which one? So China, in the year 2008, before this Western financial crisis of 2008, China's money supply aggregate amount was 6.56 trillion US dollars. Now it is about 39 trillion US dollars. US, we've been hearing about this enormous amount of money creation by the US. US was 8.8 billion in 2008. It has gone to 8.8 trillion in 2008. It's gone to 21 trillion now. It's about half the size today of China's money supply. Now, why is this important? Well, in the year, my wife teases me that I am predicting a Chinese financial crisis all the time. I've been doing it for 19 years. Because 19 years ago, there was a financial crisis in China. Only we don't know it. Because China is so good at managing the news. They had NPLs of 50%. Okay? Now, if a banking system has 20% NPLs, all its capital gets wiped out and the banks are finished. If you have 50% NPLs, you're triple bankrupt and you're finished. But we don't even know about this. S&P, Standard & Poor's, a very important rating agency, put out a report in June 2003 saying China's NPLs were at 50%. Try to find that report anywhere. It vanished in 48 hours. But you can find, I will send you, if you ask me, I'll send you, WhatsApp you, the Wall Street Journal report about that report. At least that exists. So I'm not talking through my hat, okay? Now, so they should have closed the banks and started anew. Instead, they turned to Goldman Sachs and others who put in money into the banks and recapitalized them, and then they listed the banks on public markets, and investors bought it. They said, if Goldman Sachs can buy the banks, surely it must be good. Not just Goldman Sachs, UBS, the one that I used to work for then, Credit Suisse, they all did it. I tried to tell them not to, but they wouldn't listen. Anyway, so now, interestingly, if you look at the world production of steel, this year India is going to produce about 125 million tons of steel. In the whole history of the world, there's only been one country that has ever produced more than 125 million tons of steel in a year. Apart from India this year. India hasn't yet. This year, so far we're on track to get to 125 million. China, in the year 2000, reached 128 million tons. That was already a record. No other country had ever produced that much. China was at 128 million. Do you know where China is now? 1,033 million tons. So the rest of the world's steel production, in that year, the world steel production was 840 million tons. Last year, the rest of the world still produced about just over 800 million tons. China alone produced 1,033. This is also true of aluminium, it's true of cement, it's beginning to happen with cars. If you look at solar panels for photovoltaic cells, 70% of world production is happening in China. Why? Because when a banking system is bankrupt, when it's completely bankrupt, you should close it down. China didn't do that. The same banks continue to exist. They took the bad loans off the bank's books and just said, come on, go on, lend. And it was recapitalized by the rest of the world, by capitalists. Capitalists recapitalized the Chinese banks. And so they let this continue. And now, of course, over the last 2 or 3 years, the rest of the world has woken up to the menace that China is. It's a bit late in the day. We should have known the menace it was in 1950 when they took over our neighbor Tibet, which is a Dharmic civilization. It was taken over. That is when we should have known that they were an enemy. Unfortunately, we didn't figure it out. So, now, if you look at China now, China's foreign reserves have actually been declining. But if you look at the chart on the right, this shows The green bars on the right show you China's trade surpluses. In the last year, the trade surplus was $823 billion. If you have $823 billion trade surplus, how are your reserves coming down? In the year to date, China's reserves are down by $160 billion this year. So what's going on? The Chinese, especially the Communist Party members, know that this is a house of cards. They're taking their money out. Everybody who can takes a suitcase full of cash and goes to Hong Kong. Okay, so what I'm saying then is, okay, completely. So what I'll do is, I'll just quickly summarize my key points. Well, we're now in a geopolitical environment where, now the reason why I talked so much about China is because this is very relevant to us. China is our neighbor. We are the second biggest producer of steel, aluminum, cement in the world. So we've done reasonably well on that front. Where we've completely failed is in labor-intensive manufacturing. We have missed the boat on textiles, garments, shoes, toys. These are things that everybody uses. The whole world uses it. Remember? You need clothes, you need shoes, everybody. Toys, as soon as the kids are born, they have a huge bunch of toys these days, right? So those are the things that you should be producing. And India doesn't produce those basics. Now, those basics can only be produced in large factories if the labor laws are changed. And fortunately, we have that. Now, we need to press the government to notify the labor laws now. So if they notify the labor laws, then you'll get a big surge in employment that will transform India. Meanwhile, the production-linked incentive scheme is already bringing in lots of capital and helping to lift the economy. So I think India is in a very good place. As an economy, the Bharatiya economy is on the cusp of a very substantial transformation. But we still need to urge the government to do a few more things in order to get it right. And above all, we need to restore dharma. Now, why I started with dharma, there's a beautiful book by a man called Dharmapal, written in the 1980s. It was called The Beautiful Tree. He looked at the fact that in the 1820s, British governor of Madras called Thomas Munro did a survey of education. And he concluded that every village, people voluntarily created schools that were run by the community. And so despite the destruction of Nalanda and Vikramshila and so on, the community was still providing the public services that Anand and Deepak were talking about. And it was still being provided, and India's literacy rate was higher than Britain's in the 1820s. But by the time of independence, so-called independence, our literacy rate was down to 14%. And our life expectancy at birth was 32 years. So from that, we have done a lot better, especially since 1991. I think the prospects are great for the future. And so we have the prospect of becoming a genuinely prosperous economy, but we need dharma to be restored to the center of that economy. Thank you. Quickly to address that, I don't think it is wrong to have foreign companies investing in the country. But yes, what you talk about the British role is an interesting one, because first of all, we didn't get independence in 1947. We got dominion status, which the Congress had explicitly said they did not want. As of 26 January 1930 onwards, they were saying, we're not going to take dominion status, but they did take dominion status. Now, it's interesting because during the Second World War, the British borrowed money from India, and they didn't repay it. The amount that they borrowed was $5.4 billion. $5.4 billion at that time was equal to 19% of India's GDP in 1947. 19%. Yeah? So they owed that to India. The Britain only owed $4.4 billion to the US through Lend-Lease, to fund the Second World War. They had borrowed from the US. We know a lot about this US borrowing, but they borrowed more from India. Most of that money was never properly repaid. In the end, what the British did was, what the Indian government did, and Nehru's government, is that they bought an annuity which was used to pay the pensions. With that, bought, with your own money, you're buying. Anyway, they bought a so-called annuity to pay the pensions of Britishers who had worked for the British Indian government in military and civilian side, both. And by the way, the Indian naval chief until 1959 was a Brit. The Air Force chief until 1956 was a Brit. What independence was that? So that is why, Nehru even more, he shouted from the rooftops about being a socialist and a communist. He was a communist, unfortunately, but he shouted from the rooftops about all this anti-colonial stuff. But in reality, this is what he was actually undertaking. So, frankly, if what we should have done with the British companies in 1947, if we were rational, what Argentina did. Argentina was owed about $1 billion by Britain. They said, okay, you own so-and-so property, so-and-so assets here, corporates, you hand them, we'll value these, you hand them over to us. So had they done that, had India done the same, we would have dominated the world tea industry and we could have remade it. We could have dominated the world jute industry and remade it. Then, those are the things that we used to export. So there were, this was just one of the many opportunities that we missed because of the corrupt deals that Jawaharlal Nehru made with Edwina and Dickie Mountbatten.